Imagine a $30 billion tech giant splitting in two. One side betting big on recurring software, the other on the next wave of electrification and AI. That's Fortive's bold move for 2025. Fortive, ticker FTV, is a global industrial tech leader. In 2025, it will split into two. New Fortive, focused on software and recurring revenue, and Ralliant, a hardware-driven business targeting electrification, semiconductors, and AI data centers. New Fortive merges intelligent operating solutions and advanced healthcare solutions. Intelligent operating solutions includes Fluke's connected test tools, eMate CMMS, AI diagnostics, PV testing, Industrial Scientific's gas detection and iNet platforms, Accruent's facility management SaaS, Gordian's RS Means and JOC, and ServiceChannel's multi-site FM SaaS. Advanced healthcare solutions includes ASP's STERRAD sterilization, Census instrument tracking SaaS, Provation's AI-powered clinical documentation, and Fluke Biomedical and RaySafe analyzers. Ralliant features Tektronix oscilloscopes, Keithley SMUs, EA Electro-Automatics regenerative DC systems for EVs and renewables, and advanced sensing for pressure, level, and flow. Fortive's revenue comes from hardware, SaaS, consumables, services, and both distribution and direct sales. After the split, New Fortive targets over 60% annual recurring revenue by 2026, while Ralliant remains tied to hardware cycles in electrification and AI infrastructure. The 2025 split is a major catalyst. New Fortive is embedding Gen AI across platforms and riding trends like energy transition, 6G, and AI data centers. Ralliant is set for growth in EV, semiconductor, and renewable test markets. Both are diversifying supply chains beyond China and pursuing bolt-on M&A and buybacks. There are several strengths to this strategy. The recurring revenue model targets above 60% by 2026 for New Fortive. Gen AI features are driving upsell and stickiness. There are counter-cyclical elements, like Gordian's compliance and healthcare consumables. The company has exposure to secular growth in electrification, semiconductors, and AI data centers, along with a strong M&A track record and capital return. But there are also risks. Ralliant faces cyclicality in precision hardware. There is component dependency on FPGAs and ADCs. China demand softness is a concern. There is execution risk on the split and initial trading, and intense competition from companies like Keysight, Rohde & Schwarz, Steris, Honeywell, IBM Maximo, TE Connectivity, Epic, and Oracle. Watch the split timing and initial trading. Key metrics include ARR and AI upsell traction for New Fortive, order momentum in EV, semiconductors, and data centers for Ralliant, and margin and free cash flow trends. Supply chain resilience and the pace of bolt-on M&A will be critical. Fortive's transformation could unlock value, but execution and market cycles will test both sides of the split.